Today's roll was very straightforward, so I'm spending more time looking back at last week's aspirational covered call order, which filled on Wednesday, September 10th. I'll explain how that played out and what it means for my position. I'll also go over my totals to date. Since opening this NVDA position on August 1st, my total profit is now over $2,000. Only $700 of that comes from unrealized capital gains on the shares. The rest has come from running the wheel strategy and managing these trades week by week. With the share price of NVIDIA back up at about $178 today, I have a $170 cash secured put expiring out of the money, and I am also short a covered call with a strike price of $185 expiring 7 days from today. I'll be rolling out the $170 put 1 week, keeping the same strike price. I can see it's going to cost about $5 or $6 to close today's put. And for the put next week, I can bring in about $67 or $68. So I'll expect a net credit of about $60. I'm Patricia Saylor, Managing Partner of Saylor Financial Fundamentals. I'm creating a free email series for novice options traders who want to learn to trade this way. Head to my website and sign up to be the first to get it when it's ready. This is an easy roll. I click on the position that I want to roll selected. I make sure that my new expiration date is the one that I want. I am buying to close the September 12th put, and I am selling to open a new one that expires in 7 days. I have a limit order set with a price of 60 cents per share. To see how the order filled, I go back to my positions view. I can see I have no working orders and 1 filled order, and I received 60 cents a share for it. I know from past experience that rolling a single option contract costs me $1.32 in fees. So I received $60 minus $1.32, a $58.68 premium on $17,000 with a 7-day holding period comes to an annualized rate of return of 18%. I color the line green, and for my own reference, I note that the share price was $178.12 when I rolled this position. So this position's closed, and the new one is here. Now let's talk about this covered call that expires next week on September 19th. If you watched the video last week, you might remember that the share price was really low. It was like $166.59. I couldn't get a good roll on the covered call, so I placed a good till canceled order for a $185 strike expiring on September 19th. And then I just ignored it and waited to see what would happen. On Wednesday, September 10th, that order filled, and I received $87.68. So this covered call is going to be open for 9 days, and an $87.68 premium translates to an annualized rate of return of 21.35% on this 9-day holding period. But I made a note for myself over here. This order filled from an aspirational order. I don't know what the share price was at the time, so I used the price from last Friday as the collateral value. And the annualized interest rate would be 9.15% based on the longer holding period of 21 days, which was the time from the expiration of the last contract to the expiration of the one that I just wrote. And I actually think that 9.15% is a more accurate rate of return, since these shares were not being used to generate any income for most of the 21 days between the last expiration and the next expiration. So over here, I do have this calculation of 9 days, 21.35%, but really over 21 days, this is the only covered call I've written on these shares. So this rate of return really is skewed a little bit high. Let's just go ahead and do a quick sum of total expense and income, adjusted cost per share, and profit and loss. I started trading NVDA on Friday, August 1st, and my first move was to buy 150 shares, paying $173.54 for them. Since then, I have been selling and rolling cash-secured puts and covered calls, and I have not bought or sold any additional shares. At this point, my total out-of-pocket is $24,577.20. If I divide that by 150 shares, you can see that my average cost right now is $163.85 per share. If I wanted to take the entire position back to cash right now, my net liquidating value is $26,601. If I sum my expenses and the net liquidating value, my current profit on the position is $2,023.80. Part of that is realized gain from the options income, and part of that is unrealized capital gains from the appreciation of the share price. This is the 7th weekly video that I have made since I opened this position on Friday, August 1st. And if you would like to see the whole sequence in order, check out the playlist and start with video number 1.